Moral hazard is the idea that if you remove real consequences for a person's actions, they're more likely to make risky choices in the future. Imagine someone gave you $100,000 with no strings attached to gamble at the casinos. According to the theory of moral hazard, you'd be more likely to make riskier bets because the money you're gambling with isn't yours. On the other hand, if you were gambling with your own retirement savings, you'd probably think twice before putting it all on 17. Insurance companies in particular worry about moral hazard. It's bad for their bottom line if they have to keep paying out claims to people who constantly make poor life choices, like living in Florida. So how does moral hazard apply to student loans? Well, the argument is if the federal government forgave student loan debt, more people would make irresponsible decisions about their education choices. For example, some young punk could borrow tens of thousands of dollars of government money to major in cinema. Yeah, that'll add value to the economy. Boiled down, the crux of the moral hazard argument is that people should face consequences for their actions. This is one of those inane, reductive arguments that adds nothing to the discourse, like facts don't care about your feelings or all lives matter. Because 98% of us would agree that people should face consequences for their actions. The trouble begins when you ask who should face consequences for their actions. Now, if you're of the opinion that college graduates who borrow money should pay it back, fine. From a logical viewpoint, it's fair for people who borrow money to pay it back. But by that same logic, shouldn't the executives who caused the Great Recession and had to be bailed out by the government pay back what they owe? Shouldn't the Wall Street firms who took taxpayer money have their profits garnished until they pay back every penny plus interest? If that's not feasible, then shouldn't the government confiscate these executives' homes, cars, second homes, yachts, jets, third homes, and designer drugs as collateral for the debt they owe the American people? And if you're concerned about moral hazard, what about the moral hazard of the federal government guaranteeing million-dollar bonuses to executives who caused the worst financial crisis of the 21st century? What kind of message does that send to capitalist pigs when they know they can make bad choices and the government will pay them millions of dollars? Talk about a lack of consequences. Now CEOs know they can around and not find out. Again, we're not trying to force you into accepting that student loan forgiveness is a good thing. What we want is for you to think carefully about your position. Before you argue that forgiving student loans creates a moral hazard, ask yourself, what is the greater moral hazard? College graduates who borrowed money when they were 18 suddenly getting a new lease on life? Or is the real moral hazard the government continuously giving tax breaks, subsidies, bailouts, and bonuses to capitalist pigs who are indifferent to the suffering of the working class, who will continue taking advantage of their workers and average taxpayers because they know there are no real consequences for their actions? Moral hazard is a valid concern, but the sad truth is we're already paying for it. Produced in collaboration with Fort Collins Public Media. If you have comments, questions, or suggestions for future episodes, please email us at communistfinance@gmail.com or follow us on Instagram at Comrade Rourke.